Welcome back, and you're watching Market Fatafat. But as a part of our extravagant Diwali programming, we bring to you an exclusive conversation with HDFC AMC's MD and CEO Navneet Munot, speaking on various structural trends, SIP trends, financials, manufacturing, and more. Listen in.
Automation, digitalization, I think some of these are very structural trend. And when we think about the capex from and just extrapolating the past trend may not be right, because the kind of capex that will be needed in future may be slightly different. For example, there is such a big transformation happening in the energy sector. It's happening in the transportation sector, and I can go on, where maybe what we were looking at from a capex perspective versus the capex that will be needed for tomorrow's world will be very different. Yeah, and we are clearly seeing, I think India is taking lead in some of those sectors, and maybe next few years, once people have a little bit of more clarity in terms of the technological changes and what's happening in the world, and then they put up a large money on the table and commit large sums.
Navneet, let's talk about financialization. I mean, 17,000 crore SIP number was unheard of, unthought of, some time back. Probably at this growth rate, we'll see much larger numbers going forward. And this entire ecosystem of asset management companies, some of the distributors and all of that, you see this financialization trend more structural?
I think this is just the beginning. And this can be compared with the 401k movement in US from 1980 onwards. And several of the large asset managers who are managing trillions of dollars today were managing few $1 billion then.
I see a
and
big
I think
smile
as India transforms from $3.5–4 trillion economy to $5–10–20 trillion economy, and we start from a very low base in terms of the amount of savings that come into the capital markets, I think we have a very long way to go. And I must thank on behalf of the industry to people like you who have been spreading the message of mutual fund sahi hai, invest for the long term, start early, invest regularly. I think all of that has also played a big role in creating the awareness among the investors.
Clearly, I mean, at least the data suggests that the juggernaut is rolling. I want to talk about some sectors, Navneet, the financial space, especially the lenders. We are seeing that the private sector lenders in India are seeing very good numbers. Large PSUs as well. Not only that, the small finance banks, the small borrower universe is also showing good growth. But fears are now emerging that probably NIMs could come under pressure, asset quality issues may. Is that fear legitimate or slightly early in the cycle?
No, I think the growth potential is very large, and as you mentioned earlier, I think the quality of balance sheet is pretty good. The growth potential is pretty large for next several years. I mentioned earlier financialization of savings, financialization of assets. I think there's tremendous opportunity on credit growth. The overall, in a country where you are digitally enabled and financially underserved, your ability to grow over the next several years has structurally gone up.
You spoke about climate change earlier. Though it is, the situation is very dire now, but does it also provide a lot of opportunity in power sector, in energy related areas? Because we are seeing that the legacy power stocks are doing well, power lenders are doing well, renewables are doing well, ancillaries like wire, cables, transformers, the entire space is kind of buzzing.
When you grow from $2,500 per capita to $5, $7, $10, I think there is potential for every sector to grow. And you talked about the energy, of course, it has to undergo a massive transformation. The entire transportation, the way we live, the way we kind of conduct our day-to-day business has to undergo a change, looking at the climate change, which requires a newer way of thinking, which requires a different way of investing. And I'm sure we are going to see that over the next several years.
You got, as a house, the defense piece, pretty ahead of the curve, I would say. Anything else, the mega trend which you are researching closely?
There was a bigger faith on the revival or the renaissance of manufacturing in India, thanks to many opportunities. Government has a big focus on Make in India and all the supportive policies that they have been putting, right from the whether a favorable taxation regime, whether the Make in India, the PLI, and variety of other supportive initiatives, including the infrastructure development, which is very good in the long run for the manufacturing sector because brings down the cost of logistics, the cost of power, the cost of factor markets. I think that's very good for the manufacturing in the long run. I think defense clearly stood out for us. We were pretty early in identifying that theme and has done very well.
So what's the new contra call you've taken? What's the new contra call or something different or ahead of the curve, which as a house?
No, I don't think that you have to really always look for a contra call, but in general, I think our view a couple of years back was that I think this whole quality at any price or growth at any price wasn't the right way of investing. You need to remain focused on valuations as well, and that call, I think by and large has done.
Welcome back, and you're watching Market Fatafat on ET. Now let's talk about Nucleus Software that too reported its numbers. When you look at it on a year-on-year basis, a bit of a growth that we're seeing coming in from the company on that front. But to talk more about their numbers, let's bring on board Vishnu Dusad, who's the co-founder as well as the managing director at the company. Thank you so much, sir, for joining in with us this afternoon on ET now. And I want to start by talking about your margins, because sequentially when I'm looking at the numbers in terms of margins, they've seen a bit of a fall coming in. So what's led to the fall in terms of margins?
It is essentially our effort to ensure that our teams are compensated adequately, and that is what would have resulted in this reduction. And we are also obviously spending more and more on our marketing, so that is another reason there's a reduction in EBITDA margin.
Right. So if you could, good afternoon, Sir Shailesh, for joining in the conversation. If you could actually tell us what exactly would be the margins on a more sustainable basis for your company going ahead then?
That is what is our attempt all the time, but we will not be able to commit any numbers because we do not give any guidance as a policy. Directionally, certainly that's our attempt. Our products are gaining. They continue to gain good acceptance. We continue to get good queries. So there is no reason why we will not be able to get back to our better quality EBITDA margins.
Right, so any loss of clients that you may have seen because you have taken a price hike? And have you actually taken a price hike?
The power of our product is such that we have not lost even a single customer because of our price hike, and of course our prices themselves, as we have been saying, were ultra deep discounted prices. So we have not, to answer your question clearly, we have not lost a single customer on that count.
Any new client additions, new tie-ups that you have seen then?
Yeah, we continue to interact with our prospective customers on an ongoing basis, and we would be, announcing certain new additions as and when the time is right. But yes, it is continuing. Our robustness of our product, it continues to attract our customers and prospective customers as well.
Let's talk more about your numbers, and if you look at specific geographies, your Southeast Asia and Middle East regions have seen actually a sharp decline in the revenues on a sequential basis. Is there any reason that you would like to attribute this sort of a decline coming in?
Essentially, we have not been able to provide adequate focus to our overseas customers in the last few quarters and last maybe a couple of years, I would say. But we are now ensuring that the equal focus is provided to all the customers, and that's how we will expect that these numbers will bounce back.
All right. So since you said you will expect these numbers to bounce back, then it will take a few more quarters, or will it happen in the quarter that we are in itself, that's Q3?
Maybe a few more quarters.
So, a few more quarters there, but how do you plan to deploy the cash on books? M&As in the pipeline or buyback? What is the strategy?
M&A opportunities, certainly not as of this moment. Buyback is something that the board would take a decision about.
Also, lastly, just want to know in terms of the 20 to 30% growth rate for FY24, will that continue? And overall, a guidance if you could give.
I would not be able to talk any number whatsoever.
Right, point taken. Mr. Dusad, thank you so much for joining us on ET Now to talk about the the quarter gone by for Nucleus Software and where you see it headed from here on. And that was the co-founder as well as managing director of Nucleus Software. But from one earnings to another, you also have Medanta that reported its numbers. We are joined by the management. We have Dr. Naresh Trehan, who is the chairman and managing director of the company, as well as Mr. Pankaj Sahani, who is the group chief executive officer at Global Health. A very good afternoon to both of you gentlemen. Thank you so much for joining us on ET Now. And Dr. Trehan, let me come first to you. And if you could tell us what exactly transpired in the quarter gone by, if you could give us some highlights of the quarter, as well as to add to that, if you could explain to us how has the occupancy trends been like and what's your expectation for H2?
Well, we've seen a robust growth in the last quarter, and there is a continuum of demand for our facilities, even the mature ones, and Lucknow and Patna. And so we expect that it will keep going up because there is a sort of a very solid realization that Medanta is actually providing the highest quality of care to across all specialties on the same platform at as affordable a price as possible. So this whole thing that has caused this movement, we are only 1 year from our IPO. This is our first year. And we have seen the response from the public that their satisfaction levels, the fact that the quality of care is exceptional. So there are many factors that are behind this growth.
Right. Mr. Sahni, coming to you, in terms of growth outlook, how is that looking for different surgeries? Where are you seeing the growth?
So when you look at our performance across specialties, you will find that we have actually covered all the major specialties. If you look at the results which we've announced in terms of where the revenues come from across specialties, you will see approximately 25% of our revenues coming from our cardiac care. When you look at our cancer care, we look at cancer not only in terms of medical oncology and radiation oncology, but our surgical oncology work is spread out across our Kidney Institute, across our Gastro Institute, across our Neurosciences Institute. So really, whether it is from liver transplant and lung transplant to cancer care to cardiac care, and also some of the chronic care like endocrinology, diabetes care, hypertension, high blood pressure care, etc. We really do treat across the ecosystem. We've also added in newer specialties in our Gurgaon facility like pediatric care, mother and child care. So really covering the entire spectrum of care and really doing that at a very high complexity level. So we deliver care across the spectrum in all our facilities at a very high complexity level. And we believe that this mix of care across all specialties will maintain as we move forward. Another important point to mention when it comes to the outlook is that our portfolio of assets is actually quite well balanced between mature facilities, between new growing facilities and facilities that are up and coming in terms of our Noida facility and our newly announced facility in Delhi. So when you look at our outlook across the next couple of years, we do believe that the portfolio is well balanced. We have a good growth potentials coming from all types of assets. And we have a very, very robust balance sheet. We ended September with about 600 crores of net cash on our balance sheet. So all in all, I would say well positioned to capitalize on opportunities that we see coming in the months and years ahead.
Right. Mr. Sahni, let me stay with you, and I wanted to understand what's the employee cost trend that you're witnessing right now for H2?
So when you look at our employee costs, we've actually been working over the last several years to try to bring that as optimized as possible. But we do believe that it's very important for us to invest in the highest quality of clinical talent, which we've continued to do, not only in our newer facilities, but actually if you look at our facilities, our mature facilities as well, we've added in significant clinical talent over the last 12 months in our mature facilities. So our thought has always been to invest in our clinical talent, and we believe that we will continue to do that as we move forward. As far as the cost ratios go with respect to our manpower costs or our ratios with respect to manpower and revenue, if you actually look at it, it is amongst the better ratios in the industry. And we believe that some of that comes from the benefits that we have because of the economies of scale that we have. As you're aware, we have fairly large institutions, about 1,300 beds in Gurgaon, about 1,000 beds in Lucknow, and about 600 beds in Patna. So this scale allows us to get the benefits of operating leverage, and you're seeing that play out as some of our newer facilities mature, as some of those facilities add in patient volumes. You see that the benefits of scale will play out, and we believe that that to be an advantage for us, not only in terms of managing the costs across the network, but also in terms of our ability to serve a wide variety and a wide range of patients across the communities where our hospitals are.
Okay, thank you so much, gentlemen, for joining in with us this afternoon on ET Now, telling us about your company and the outlook going forward as well. That was the management of Medanta Global Health for you all on the channel. But, as we step into a new Samvat, ET Now brings you a whole host of market insight to decode what's in store for the new year. So this Diwali, get ready, taiyar hoke aaiye, and stay tuned in for a very special programming. And with that, we are absolutely out of time on this edition of Market Fatafat on ET Now. It's a goodbye from Cheryl, myself, Vinny, as well as our producer, Snehi, as well as Somashri, and our director, Trevor, as well. And a very happy Diwali to all the viewers.